Hello everyone, my name is Raska Fauzi Salim as the leader group 1 from Financial Statement. With my members represent as follows: Ega Rossi, Anilistia Ningsi, and Rahma Syahrilia. So, in the current situation such as pandemic COVID-19, a lot of companies have to quit. Because of it, the effect to the economy was very bad. But if your company doesn't want to quit, how the way or what the solution? And I have one workable solution to keep your company stable and growing up. What the solution? Namely financial statement. So let's begin to discuss about financial statement.
The financial statement is a report on the result of the analysis of financial transaction in a certain period, which can be used to describe the company's performance. So, the financial statement divided into 5 parts: profit and loss, change in the capital, balance sheet, cash flow, and notes to financial statement. Here we go to the profit and loss. Profit and loss statement are very important report because every expense and income is very important in a business. Profit and loss statement are divided in 2 formats. First is single step. This report is very simple and usually used by small businesses. Second, multiple step. The report are very detailed and more relevant, usually used by a large company.
Do you know change in the capital? Change in the capital are a type on the financial report that provide information about change in the capital or equity of a company in a certain period. This change takes the form of an increase or decrease in the amount of capital of a company. Next is balance sheet. The balance sheet is a type of the financial statement. It presents the asset, liabilities, and capital account on one period. Balance sheet has 3 sections. First, the asset and fixed asset. Second, the liabilities up into the categories current and long-term liabilities. Plus, the equity, so amount of money that would be returned to our shareholder.
Now let's talk about cash flow. The cash flow, the flow of money or cash in and out of the company. To provide information about the sources, uses, change in cash and cash equivalents during an accounting period. In a cash flow, there has activities. First is operating activities, are cash receipts and disbursements that are intended for operational activities during one accounting period. For the examples of operating activities, cash are payment and receivable income, salary payments, or operating expense. Second, investment activities. Investing activities are cash receipts and disbursements aimed at the acquisition and disposal of fixed assets and other non-fixed financial assets. An example of cash flow from investing activities is the receipt from the sale of fixed assets, intangible assets, and other long-term assets. Third is financing activities. Financing activities are cash receipts that need to be paid back and or cash disbursements to be received back, which result in change in the amount and composition of long-term investments, long-term receivables, and government debts in connection with deficit funding or the use of budget surpluses. First, direct method. With the direct method, cash flow from operating activities are broken down into cash inflows and cash outflows. In this method, Cash flow reporting is done by reporting the groups of cash receipts and cash disbursements from operating activities in full or gross, and then continuing with investing and financing activities. Second, indirect method. The indirect method means that cash flow from operation is determined by correcting the net income reported in the income statement with several things such as cost of preparation, increase in current assets and current debt, and profit or loss to the disposal of the investment. Now is notes to financial statements. The definition of notes to financial statements is a part of financial statements that provides additional information on items in statement of financial position or balance sheet, comprehensive income statement, statement of change in equity, and last, cash flow statement. What the function? The function of notes on financial statements is to provide an explanation or details of the item presented in the financial statement and information about items that do not meet the recognition criteria in the financial statements.
After all of them, now is a financial report function. In principle, financial statement serves as a tool to help business assess a company's financial position in general. The following are some of the functions of the financial statement as follow. First, as material for review or examination. Financial statement can provide complete data and information about the company's financial condition, such as asset, liability, capital, revenue, and expense. Second, as a reference and guide in making decisions, as a consideration tool in making important business decisions. Why? Because help create new strategies, the companies to improve business performance, and last, increase business credibility. Companies that make professional financial statements show that the company has implemented a data recording system that is reliable and accurate. Can you imagine if the financial statements are reliable and accurate? Yes, it will make the investor more trustful investment their money and make high credibility level in a company. After the function, now is a purpose financial statement. The general objective of preparing a financial statement are as follows. First, to assist companies in decision making. Second, helping management assess and estimate future business growth. With complete financial information, a company can assess current business condition and predict future business condition. And last, evaluating financing activities and business operation. Financial position information can also help a company assess its investment activities and operational capabilities for a certain period.